Welcome to MS Excel financial function for double declining balance methods to calculate depreciation of a fixed asset. As I mentioned in previous lesson that when an asset is purchased, it cannot be recorded as an expense because of its life, which is more than 1 year. So then we have to calculate the depreciation on the basis of the usage of fixed asset. Double declining balance method of calculating the depreciation is normally used for high-tech equipment, computer equipment, mobile devices. The asset whose value lose very rapidly and they become obsolete quickly. With the help of double declining balance method, we can assign a higher amount of depreciation to profit and loss account in the early years of asset life, whereas a lower amount of depreciation expense would be charged to the profit and loss account at the end of asset's useful life. Syntax of double declining balance method function. 4 compulsory arguments has to be used in the financial function DDB, whereas the 5th one is optional, which is factor. First one is the cost. Cost is the initial purchase price of an asset. Salvage is scrap value of an asset at the end of its useful life. Life is a useful life of an asset. Period is a year number for which we want to calculate the depreciation, or it can be the month number for which we want to calculate the depreciation. If we are using life in years, then we have to mention period as years. For example, life is 5 years, so period could be 1 first year, 2 for second year, 3 for third year, 4 for fourth year, and 5 for fifth year. But if we are using life as months, say we are using 36 months, the period could be 1 for first month, 2 for second month, and so on. Factor is optional for this function. Factor represents the times of rate we want to calculate. If factor is not provided in the DDB financial function, it is automatically assumed to be 2. 2 mean double of the rate. Let's suppose an asset has a useful life of the 5 year. Then rate should be 1 divided by 5 equal to 20%. And if we want to use factor as 1, that means we want depreciation at the rate of 20%. And if factor is used as 2, it means that we want depreciation to be double of 20 equal to 40%. And if we mention factor as 3, the depreciation rate should be 3 times of the rate equal to 60%. Now let's get an understanding of mathematical formula used to calculate double declining balance depreciation. Under double declining depreciation method, depreciation can be calculated by multiplying the rate to the book value, and book value can be obtained by deducting cumulative depreciation from the cost of the asset. In order to find depreciation under double declining balance method for a particular year, we have to take the book value at the beginning of the year times rate of depreciation. How can we calculate the rate? Rate can be obtained by dividing 1 with life of asset. For example, if an asset has a life of 5 years, rate would be 1 over 5 equal to 20%. And if an asset has a life of 10 years, rate would be 1 divided by 10 equal to 10%. Now we can move on to our practical example. In this example, a machine with the cost of 50,000, salvage value 10,000, life of 5 years has been set for an example. First we need to determine the rate. As the life of machine is 5 years, so we need to divide 1 by 5. So 1 divided by 5, we can set life as an absolute reference. B3 is a absolute reference. 1 divided by B3, and the same can be obtained for second year, third year, fourth and fifth year. Now we can convert this 1 divided by 5 is equal to 20%. So it is the percentage. In percentage, 1 by 5 can be represented as 20%. Next one is factor time rate. So I have developed a factor as 2. So that means this cell reference has been given as absolute reference. B5 is the absolute reference, and it is multiplied with the rate. Rate is 20%. So that means we are doubling the rate. So it will become 40%. Now we have to apply this 40% to the book value of the asset
For the first year, cost is the book value, as there is no cumulative depreciation at the beginning of year 1. So cost is 50,000. We need to calculate to 40% of 50,000, which is equal to 20,000. For cumulative depreciation, we need to make G7 as absolute and then copy it to rest of the 4 years. In this way, we can get cumulative depreciation over the 5 years. Last column is the book value. Book value is determined with the help of cost minus cumulative depreciation. So 50 minus 20 is equal to 30,000. So in particular case, I have made B1 as an absolute, base cost is a fix, and we cannot change the cell reference of the B1. B1 cost minus cumulative depreciation, and for B3 cost minus cumulative depreciation will result into the book value. For the year 2, the book value at the beginning of the year 2 times 40%. So a book value was 30 and times 40, we will get the depreciation for the year 2, depreciation for the year 3, and depreciation for year 4. When we calculate the depreciation for year 4, we will get 43,520, which is in excess of the cost minus salvage value. The cost minus salvage value results 40,000, so it should not go beyond 40,000. Delete it, and we can see that the remaining 39,200 minus 40,000 will result into 800. So maximum depreciation that can be charged in the year 4 can be 800, and accumulation will become 40,000, and for year 5 there would be 0 depreciation. So that is the basically mathematical calculation, or how does the DDB function works. Now let's move on to DDB function. In DDB function, first one is a cost is 50,000, comma, second one is a salvage, which is 10,000, comma, third one is a life, which is 5 year, comma, fifth one is a year. So cost, salvage and life has been made an absolute, whereas B7 or the number of the year, for the first year we can put over here a figure 1. Period must be 1 for first year, and period should be 2 for the second year, period must be 2 for the third year, and for fourth year, and 5 for fifth year. So total depreciation that DDB has calculated is a 40,000. We cannot go beyond the 40,000, as the cost minus salvage is equal to 40,000. Let's make a little bit change over for the periods. Say the period is 1. So that means we want to calculate the depreciation at the rate of 20%. So 1 by 5 is 20%. 20% times 1 is equal to 20, and this we will get a depreciation of 10, 8, and last that was written by hand, so we need to change it, and third one should be the 33,615. So in this case we can see that we need to add the factor. So comma factor is here. Factor mean multiple of depreciation rate. So depreciation rate multiple should be the 1, and in this way we can get the depreciation, and this depreciation is same that we have calculated in the column G. Even we can get the multiple for times 3. So times 3 mean 20 times 3, 60%. For 60%, this is 49,000, which cannot be go beyond 40,000. So we need to deduct this one and then this one. Again, it is more than 40,000, so we need to deduct this one as well, and this one as well. So the last one should be 10,000. It cannot go beyond the 40,000, and in this case DDB has automatically calculated 30,000, 10,000 and 0. So that was the basically phenomena how mathematical calculation work for DDB and actual application of DDB function to calculate the depreciation. Subscribe my channel to get more useful videos on Excel, accounting and mathematics. Thank you.
Subscribe my channel to get more useful videos on Excel, accounting and mathematics. Thank you.